All right, let's talk about a goal that I think is on a lot of our minds: financial independence. Not just getting there someday, but finding the absolute fastest, smartest way to do it. We're diving into the world of FIRE. That's financial independence, retire early. So let's get right into it. So let me just ask you something right off the bat. Could the money you spend on your coffee every day, could that actually be your ticket to retirement? I know it sounds a little out there, but hang with me because we're about to see how these tiny, consistent habits can turn into something absolutely massive. The end goal here isn't just about having a giant pile of cash. It's about what we're calling happy fire. And really, what that means is freedom. It's the freedom to choose to live your life exactly how you want to. And well, that's a pretty powerful dream, isn't it? But let's be real for a second. The usual advice we hear, save a little bit, wait 40 years, it just feels so slow. For so many of us, the whole idea of building real wealth can feel like this impossible mountain to climb. We're here to show you a different path. Okay, so let's start with the most obvious strategy, right? Just saving your money in a bank. It feels super safe, totally secure, but we're about to see why, if your goal is actual growth, it's pretty much a losing battle against time and, well, inflation. And this quote right here, it just nails it. A savings account is fantastic for an emergency fund, for security, you absolutely need that. But it's not a growth engine. It's not designed to make you wealthy. To get to FIRE, you need to put your money to work. They're just two totally different jobs. So, if a bank account isn't the answer, then what is? Well, let's think of this like a race for your future. We're going to line up three different growth engines side by side and see which one really has the horsepower to get you across that financial finish line the fastest. So I'll ask you, if you had to put your money on one of these strategies to do the heavy lifting, to work the hardest for you, which one would you pick? Let's stop guessing and actually look at the numbers. Wow. Okay, this table tells a pretty incredible story. Just look at that last column, time to 10x your assets. In a regular savings account, over a century, 115 years. Now, if you invest in an S&P 500 ETF, that's basically a single fund that holds the 500 biggest US companies, you cut that time down to about 24 years. Big improvement. But then, look at the US Big Tech ETF. At an average of 20% a year, you could potentially 10x your money in just 14 years. Now, of course, it's super important to say that higher returns come with higher risk, and past performance is no guarantee for the future. But still, that is a game-changing difference in speed. So what's the magic behind this? What's the secret sauce? It's all about compound interest. Honestly, think of it like a snowball rolling down a huge hill. At the very top, it's tiny, but as it rolls, it picks up more snow, getting bigger and bigger, which helps it pick up even more snow even faster. That's your money. Your earnings start making their own earnings, and pretty soon, you've got an avalanche of growth. Okay, so we've looked at the percentages, we've talked about the timelines, but that's all a bit abstract, right? Let's make this real. Let's go all the way back to that daily cup of coffee and see what it actually looks like when you turn that expense into an investment. So here's the scenario. It's super simple. You manage to invest just $10 every single day. We're going to see what that one simple choice looks like 2 decades down the road, running it through those three growth engines we just talked about. You're going to want to see this. All right, first up, path number 1. You take that $10 a day and you stick it in a normal savings account. After 20 years, yeah, you've got a nice little pile of cash. But as you can see, the growth on top of what you put in is pretty small. That's that 2% return in action. Now, let's bring in path number 2. Same $10 a day, but this time it's going into an S&P 500 ETF. And whoa, just look at that difference. It's already enormous. That is the power of the stock market's average return. Your financial future just got a massive upgrade. Okay, but now for the main event. What if that same $10 a day went into a US big tech ETF, aiming for that 20% average return? Let's see path 3, and boom, there it is. It just completely dwarfs the other two. I mean, this single picture tells the whole story. The exact same effort, the same $10, but a ridiculously different outcome, all depending on the growth engine you chose. Okay, let's drive this home with one more really powerful example. So forget the $10 a day for a second. Let's say you get a bit more serious and you invest a consistent $500 every month into that same high-growth big tech ETF, and you do it for 15 years. after those 15 years are up, that steady investment could potentially grow into this. Just let that number sink in for a second. The point is, by being disciplined, by investing in a high-growth area and riding out the ups and downs, a life-changing amount of money isn't some crazy fantasy. It's a real mathematical possibility. And look, this isn't luck. It's not a lottery ticket. This is the real, tangible result of the two things we've been talking about this whole time: investing consistently, week after week, month after month, and letting that unstoppable force of compound interest do its thing. So after seeing all that, the data really points to a pretty clear conclusion, doesn't it? Let's take everything we've just seen and boil it down into a simple, actionable plan that can kickstart your journey to financial independence. The big takeaway here is simple. If your goal is that happy fire and you want to get there sooner rather than later, then consistently investing in a high-growth engine like US big tech ETFs really does seem to be the most powerful accelerator, as long as you understand and are comfortable with the risks that come with it. So here it is, your whole plan broken down into 3 dead simple steps. 1. Figure out your goal. What does fire actually look like for you? What's your number? 2. Choose your growth engine. Based on what we've seen, pick the one that matches how fast you want to go and how much risk you're okay with. And 3, this is the most important one, start investing consistently right now. So we'll leave you with this one final thought. The next 15 years are going to fly by no matter what you do. The choice you make today about what to do with that daily coffee money could be the single biggest thing that decides what your future is going to look like. So, which path will you choose?